All right, welcome to 3 Minutes with Jay. Jay Bala, our portfolio manager at AIP Asset Management in Toronto. Harry Dent, Mark Faber, and Nassim Taleb, who are all known for their prognostications around markets falling. Yet they keep calling for it. It's not happening.
I mean, I think one of it's just a timing issue. So October historically has been one of the most volatile months. The reality is, the key takeaway is, obviously don't panic and freak out and sell everything you have, but also understand that, they're wrong until they're right, meaning they're eventually going to be right. Play it a bit safe at this point, right? These guys aren't idiots. They've actually predicted things quite accurately in the past, and some of their concerns are very realistic concerns, right?
Like, I know Harry Dent, he's very much on the side of, our population is getting older in America, or North America especially. What happens when they start pulling money out of the markets to pay for their retirement? And if you just look at what he said, which I thought was really funny, was that he predicts this is going to happen in the next 3 years, and if it doesn't, he's going to become a chauffeur on some tropical island somewhere.
Yeah, look, I think I'm in agreement with him. I think, if something's going to happen, it's going to happen in the next 3 years. I think there's a very high probability of that. All of the signs are there. But also keep in mind, we don't really think it's imminent, meaning I don't think it's happening in the next few weeks. One of the guys I've always liked is Nassim Taleb, that says, we're more impacted by black swans. Those are the events that are sort of unknown events. Yeah. Those are the events we don't even think about, right? Like, nobody woke up in 2008 and said, what is a credit default swap? What is a subprime mortgage? These are not even terms anybody understood, right?
Yeah.
And that's what actually ends up wiping out the markets. It wasn't, earnings growth. It wasn't, stock value. It wasn't any of that. It just came out of the blue and just wiped everything out. And he says that's the key risk for everyone. It's the unpredictability. You take something as simple as an oil ETF. I think we may have spoken about this before. And, I think fundamentally somebody buys an oil ETF saying, okay, well, the underlying asset should be barrels of oil. But if you actually go and look and see what that ETF actually holds, it's a futures contract. That's, the counterparty is some investment bank or some bank somewhere. If things go wrong, you don't get to go and say, where is my barrels of oil? Those don't exist. I think Warren Buffett's always talked about that, explosion in derivatives. That's sort of like your nuclear weapon.
Yep.
It's everybody was to call on their option today. There isn't enough money going around to actually pay up for all those derivatives, right?
Well, I think I was just on the U.S. debt clock last week looking at it, and if I'm going off my memory, I believe the derivatives contract market was up to $500 trillion. There isn't $500 trillion in existence.
No, the global economy is around 35 trillion. So you're looking at, a multiple of the global economy.
But, I've also seen in my near 20 years or 2 decades in this business, the wall of worry can continue to climb higher and higher and higher. If you go to the sidelines with 75% of your portfolio and the market continues higher, people have that I'm missing out fear.
Exactly.
Right? And then they get angry or upset about it. If I just go back to 2008, you might have been sitting on the sidelines for a year and a half before all doom just unleashed.
And avoiding those situations, having more of a safety approach, as you get into times where, you're saying, some of the stuff really doesn't make a lot of sense. That's probably the better approach.
All right. Thanks, Jay.